Okay, so for those of you who want to start to understand charts, we got you. Bruce Kamich is here with us. He knows all things charts, works for Jim Cramer. Bruce, we picked UTX because they just reported, and we want to walk through your brain and how you decide whether or not this is you're bear or bull on this stock. So the first chart we have is the daily price.
Right.
So what does this tell you?
Okay. Long-term trend is this orange line, 200 days simple moving average. Okay, we want to trade in the direction of the slope of that, unless it breaks down. And this shorter green line is a 50-day, not quite 2 months of trading, which has a negative slope.
So we don't like that because it has a negative slope.
Right.
Okay, moving on to the volume on balance. What does this tell us?
Okay, simple math. If a stock closes higher, we add the volume. If a stock closes lower, we subtract the volume.
Why?
Okay. It's a simple way of deciding whether buyers are more aggressive or sellers are more aggressive. So if the line is going down, as we have had in the past 6 weeks, sellers are more aggressive. So we're having more volume when the stock UTX closes down on a day.
So that means more people are selling than buying.
Yeah, they're being more aggressive.
So how about now, the next chart is momentum.
Okay. Momentum is the rate of change in prices. Okay. As a stock goes down, and if somebody steps in to buy it, it will slow its descent. Like you're driving down Lexington Avenue, and you're going to make a right-hand turn on the 23rd Street, go over to the Home Depot, and you have to slow down to make the right-hand turn.
Yes.
Okay, so as a stock comes down, like UTX, the momentum is slowing.
As people start to buy it.
As people start to buy it.
That makes sense.
Into weakness.
Right.
Okay. And it did show improvement in the last couple weeks.
It did, a little.
All it did was get back to the zero line. Okay.
So net is zero. It's nothing.
It's improved, but not enough to say, come and buy me.
Right, so this isn't jumping out at you yet as a buy.
No.
Okay, fine. And then we move on to the weekly, because you had said you also like to look long term.
Right.
So what is that telling you?
Okay. So this moving average is 40 weeks. Okay. 40 Fridays added up, divided by 40. It's been trending higher for 2 years, so we have a very long-term trend. This would have been the way to stay in the stock for the past 2 years. However, we've been testing that line in the last month.
How so?
Okay, so we have some dips the last 4 weeks below the line.
And that means you're testing it because it comes down and it comes back and it comes down and it comes back.
Yeah. And if it starts to spend too much time below it, it's going to pull the line, which is now flat, lower.
It'll pull the trend line down. So looking at this long term, it looks kind of good to me.
Yeah, but you have to be sensitive to when the market is turning. And that's what we're seeing now. The slope of the line is now flat or neutral, and we're spending more time below the line than we are above.
Oh, I see, because there's more blue here.
Yeah.
And so you're worried going forward, that doesn't bode well.
Yes.
Okay, your next chart then is volume, again, on a weekly basis.
Okay, so...
This looks way more violent.
So it certainly had very strong buying, very aggressive here week over week, okay? Then it had a correction, but the stock didn't decline. So somebody got out of it, but the stock kept going up, which is impressive. And it's been going up most of 2007 and into 2018. But it's been coming down for about 6 weeks.
Not good.
Not good. So somebody has been reducing their position. Okay, they could have been a very aggressive buyer here. 2 years later, it's reached their price targets, fundamental or technical, and now they're on balance, they're selling more stock than they're buying.
But by somebody, first of all, we don't know who that somebody is. Second of all, we don't know if that somebody is a technical trader, a fundamental trader. We don't know what that person is doing because you don't care about the news when you look at this, correct?
No. The news is not important to a technical analyst. How the stock reacts to the news is important. So if the news is on the face of it bullish, okay, they beat the numbers, but people are selling. Like it closes down on the day after an earnings report. The earnings report was anticipated, okay? We bought anticipating a nickel better. It comes in a nickel better. We have no encore. We become sellers.
Which is exactly what happened with UTX, right? So it came down after earnings. This final chart, I know I said that it looks like my son's football plays. What does this tell us?
Okay, this chart eliminates volume. Okay, it only pays attention to price reversals and price reversals of a certain percentage. Okay, So it eliminates noise. So that first chart with price is all over the place. It's difficult to discern what's going on. This is just the kind of the essence of what's going on, price change.
Okay.
No volume, and pretty much ignores time. This chart does not get updated when the Earth rotates and we come in and we have a new trading day on Thursday. It only updates when we move the minimum fluctuation.
Whoa.
Okay.
So what is this
different.
telling you right now?
Okay. This gives us a very good line in the sand. So the lowest it's been recently was 121.25. If we go below 121.25, the next entry is 120.05 cents. Okay. That's a new low for the move down. Okay. That means everybody who bought it going back to February, there's a little 2 up there.
Okay.
Everybody who bought it going back to February now has a loss, no matter how smart they were, no matter how if they bought it at 125 or 124,
Boy,
now they have a loss.
hindsight is 20/20, huh?
Hindsight isn't bad tool. Okay.
Okay. So, but based on this, based on everything we looked at, where do you stand on UTX today?
There's risk that it's going to move lower into around 110.
So, do you short it?
You can short it if that's your approach, okay, if you're willing to trade both sides in the market, but it can be just good to avoid it.
Stay clear.
Okay. There's no reason to buy a stock in a falling market.
You know what I think everyone should do is follow Bruce on Real Money, because you wrote all about this. All the charts are there. He updates this stuff all the time. So, Bruce, thank you so much.
My pleasure.